This town, Washington DC, has been thrown into a spin. Donald Trump has promised radical change.
In the US markets right now, it's all about what they're calling the Trump trades, and there's a few of them, so let's go.
Hello, I'm Rebecca Jones and welcome to the Bloomberg Australia podcast. Today on the show, Donald Trump's decisive election victory has already led to a frantic repricing in financial markets around the world. After all, he has vowed to slap across-the-board tariffs on US imports, slash taxes on everything from corporate profits to overtime pay. He's also mused about changing the Federal Reserve's leadership and claimed the right to have some sort of say over interest rates himself. Richard Henderson is a cross-asset reporter with Bloomberg News, and he joins me today to try and decode what this might mean for us. Rich, welcome back. Great to see you.
Good to be here.
So let's rip right into the global implications of Trump winning the election. What does his second term mean for global markets?
Investors have been grappling with this over the past week. The key question is, does the return of Donald Trump to the White House also bring about inflation in the US, just as it's being gotten under control by the Federal Reserve? And there's really three policies that investors are talking about where this could be an issue. The first one is migration. There's a plan to deport a whole bunch of illegal immigrants in the US. That potentially could push up labor costs, which would then be inflationary. The second is tax cuts. We see personal tax cuts roll over at the end of 2025. They might be extended or even broadened out. And Trump also wants to cut the corporate tax rates. The third one is tariffs. We've heard about this 60% tariff on Chinese imports, other across-the-board tariffs for other countries. That would also be inflationary. The costs of goods would be higher. Those higher costs are passed on to consumers, leading to an inflationary pulse through the US economy. If this happens, then there will be significant impacts for global markets, including the fixed income market, US government debt, also stocks and other assets.
So there are these three sort of big banner items that we're looking at here, right? So tariffs is one of them, the migration question as well, and also
tax cuts. Let's go in a little glass half full, because that's just how I like to do it, and look at what investments are likely to do, given these three big issues that are looming and yet really unknown for the most part of it. We just have promises at this stage. Which investments are likely to do well under this Trump administration? Which ones are already doing well? Well, you should start with Bitcoin and crypto. It's been on a tear. We've seen new record highs for Bitcoin in particular. Trump is a big fan of Bitcoin. It was quite an intelligent decision to, lure the Bitcoin bros into Trump lands.
He really targeted them, didn't he?
And they turned out to vote as well in what we're hearing in significant numbers. So we can expect some sort of benign regulatory environment for crypto. The head of the SEC, the Securities and Exchange Commission, which is one of the key US financial regulators, a guy named Gary Gensler, is famously skeptical of crypto. They want him gone. He'll be gone very quickly and brought in he will be replaced by someone who has a bit more of a supportive agenda for crypto. The other assets, stocks would be another key one to look at. Trump is generally pro-growth. He likes deregulation. We can expect stocks to do well in that environment of an expanding US and global economy. There are specific sectors you might look at, financials. If we see deregulation in the banking system, we saw that in Trump's first term. So companies like JP Morgan might do well. And then tech is probably going to do well. It's already done very well. That's probably going to extend under a Trump term.
Can we stick with stocks for a second? How is that translating through to ASX-listed stocks? Are we seeing the same kind of thing here?
Demand for US equities, it's a good proxy for global risk appetite. So Aussie stocks should do well in that environment as well. The sectoral makeup of the US stock market and the Australian stock market are very different. Australia doesn't really have tech in the ASX 200, whereas in the US, it's almost half the index. So we are going to see probably a good environment for Aussie stocks, but very different. And if we start to see a slowdown in China, China's going through a really important phase right now. If it's hit by 60% US tariffs, that might weaken it further at this very vulnerable moment. That then may decrease demand for Australian goods and services from China, which could weaken some large Australian companies. There may be a slowdown in demand for iron ore, for instance. That would hit companies like BHP and Rio Tinto. And on the flip side, if there is this potential inflationary pulse from the United States economy, that then may filter down into interest rates in Australia being higher for longer, which could, at the margin, support the banks in Australia. Think about CBA or Westpac.
I want to zoom in a little closer into the impact on us, on Australia, a little later on. But I do want to pick up on an asset class that we haven't looked at yet, and that is the bond market. We had Nouriel Roubini on Bloomberg TV this week saying that with Trump back in the Oval Office, we could see the return of bond vigilantes. Now, for those of you who don't know who he is, he has the rather ominous nickname of Dr. Doom. He's an economist who predicted accurately the global financial crisis. Now, he hasn't been as on point with some of his predictions, for example, throughout the COVID-19 pandemic. But Rich, let's have a look at this latest statement from Roubini.
I would say, however, is that he cares about market discipline. And if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable.
Is this likely to happen?
It's a great question, and it all relates to the prospect of Trump policies being inflationary. If they appear to be, then what Roubini is saying, the bond vigilantes, and it's a great term, it basically means, investors who can bully the US government by aggressively buying or selling debt, which can then manipulate or shift the yield on that debt, which can make it more expensive for the US government to borrow money. So what he's saying is that if investors are showing concern that Trump will be inflationary, they could aggressively sell their holdings of US government debt, which would push the yield higher. And so when the US government goes to borrow money from investors, it will be more expensive to do so. And there's already so many concerns about the US deficit, that would increase even more if it's more expensive to refinance that existing debt. So he's saying, yes, the bond vigilantes may show up. They may say, you've got to watch out on inflation. They'll bully the government into tweaking that policy to make it a bit more supportive of inflationary policies or more helpful policies.
And surely Trump has got economic advisors around him that can help him sort of navigate away from that, right?
Yes, and he's got a few Wall Street types, hedge fund managers that are in his inner circle who will be very aware about this potential and will be able to not just see those bond vigilantes start to act, but they'll actually know them personally.
It's interesting. One thing I mentioned at the very start of our conversation was one of the big questions that is out there is whether or not Trump is going to want to replace the head of the Federal Reserve, Jerome Powell. Now, Powell's term is supposed to run through May 2026, right? Let's first hear how the president-elect described Powell's job to my boss and Rich, your boss too, John Micklethwaite, just before the election.
Look, I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do?
So obviously he's being a little tongue-in-cheek there, or is he? Rich, this topic has come up in Trump's last presidency. Is he likely to go down this path again?
I think we can expect Trump to be very vocal, and if Trump's policies are inflationary and the Federal Reserve will do what it has to do and keep rates high or even increase interest rates, Trump will be very upset about that, and he'll try and bully the Fed into keeping them low or cutting. And that's where we'll see that friction. Jerome Powell has come out and said Trump can't fire him. It's against the law. There's no legal power to do so. There is some work done by some scholars saying that Trump could demote Powell to being a regular member of the Federal Reserve rather than the chair. That hasn't really been tested legally, so maybe we see some precedent sets, or at least that go to the courts, I don't know. But the friction is likely to stay there.
And when we come back, we'll have a look at what this means for other interest rates. And I mean for your and my monthly mortgage repayment.
Right around the world, we're seeing an increase in protectionist measures. Economies and countries right around the world are engaging in this in one way or another. What makes that problematic for Australia is about half of our economy is trade. The proportion of our economy which is trade is much higher than the Americans. It's about a quarter. Europe, it's about a third. For us, it's about half of our economy. And so we've got a lot at stake here.
And welcome back to the Bloomberg Australia podcast. You're with me, Rebecca Jones, and my guest, Richard Henderson, Bloomberg News reporter. We just heard there from the Australian Treasurer, Jim Chalmers, talking to the ABC this week. Rich, there's really no bones about it, is there? Trade impacts everything. Can you explain what this new era means for Australian interest rates?
Well, a global trade war sounds pretty scary and it would have pretty bad effects for a lot of countries. The issue again comes back not just to a potential slowdown in China. If we see those tariffs from the US put on Chinese goods, the Chinese economy slows, there's less demand for Australian goods from China, goods and services. That would be a problem for the Australian economy. But at the same time, what happens with inflation? If there is that inflationary pulse through the US economy, does that hit Australia? Do we, because of that, have to keep our interest rates higher for longer? So you've got these twin effects, because a slowing of the Australian economy and interest rates and inflation being elevated is not a good mix. That's that stagflationary scenario. We don't want to see that. But again, there might be an offsetting of some of these impacts. So it's very hard to read through it right now.
And how immediate are the results? Does it depend how these trade wars unfold, or will we expect to see the effects of any sort of tariffs that Trump does follow through pretty much straight away in our economic data?
I think it will take time, and I think it's very dependent on how quickly Trump acts. You know, one person I speak to very regularly, he's a hedge fund manager. He is very close to some of these topics. His idea, he kind of called the election. He knew Trump would win by a landslide. He was very confident. He positioned his portfolio for that. He was basically saying that we're probably never going to see 60% tariffs. What we'll see is that used as a bargaining chip with China to extract something, to get the terms of trade a little bit more even. So that's this type of scenario we could see play out, where we don't actually see those tariffs. It's just a bargaining chip. So it's very hard to read through some of these cross currents.
So we've heard what stocks have been doing so far and how other assets like crypto are faring and are likely to faring in the weeks ahead. Whether or not Trump is going to fire his top central banker and what a potential trade war is going to mean for Australia. So I'm scared to ask, but what is the next big blockbuster event that Australians should be keeping their eyes on?
Well, we have the Fed's monthly meeting in December where they may cut rates again. That will be very important to look for. I think also looking at who Trump surrounds himself, we're starting to see announcements of senior positions, which are very telling. We're seeing a lot of loyalists around Trump. And then when Trump comes to office, what happens in those first few weeks? Do we see a rush of, some very important legislative and executive orders that are pushed through quickly? And what do we see in terms of the Trump agenda? How quickly is that executed and to what degree? That's really the key.
And we'll be following along. Rich, thanks for joining me.
Thanks so much.
And thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.